Good morning, everyone. Welcome to the second RF Crypto video. Thank you for joining me. Let's just jump straight into it. Today's cryptocurrency market is looking at a 0.72% decrease from yesterday, currently standing at $2.24 trillion. It's not such a big decrease. Markets are moving laterally at the moment, and it's another boring day. If we look at the top 10 or top 20, we can see that most of them have gone down slightly, 2%. It's quite surprising to see that Bitcoin has only gone down by 0.3%, while Ethereum has gone down by almost 2.2%. This is just because there has been quite a bit of back and forth between the Bitcoin and Ethereum price. They're not moving consistently with each other as they used to in the past, and Ethereum usually takes more gains and less losses, but it doesn't seem to be the case anymore. And if we look further down, Solana has lost a whopping 3.3% and almost 11% since last week. This is mainly due to the DDoS attack that took place in their systems that took it down for quite a few moments, and also caused congestions and a sort of slowdown in their systems. People weren't able to do transactions at the speed that they were used to at Solana, and then they started to panic, and there was a bit of a sell-off. But it's said that those problems have been resolved and everything's back to normal and operating, so we should see this trend reversing. 172, we haven't seen this since quite a bit of time. It's quite low compared to before. The rest, Polkadot is up by 3%. Luna, surprisingly, is down by almost 10%. And Polygon down by 2%. So it's just the fact that because the whole market has gone down, all these other coins will also go down with it. It's just as simple as that. It's another boring day. I think consolidation is happening. And we'll have to see, because people are now more fearful than greedy, and they're more wary of what's happening in the markets. They're watching what's going to happen, and we'll just have to see what's going to happen in the next couple of days, especially with Christmas and New Year's coming up. Usually there are pumps then, but this time, because of the new variants, the new restrictions, and all the bad news about Evergrande and everything else that's just happening in the market, we might not see that rally happening this year, but we'll just have to wait and see. Moving on to the news, there are some analysts that are saying that Bitcoin's open interest wipeout will give way to further upside. A couple of weeks ago, actually last week, Bitcoin dropped to 42,000 and obliterated its open interest and liquidated a large swath of leveraged traders. There were a lot of long leveraged positions, and when the price went down by 15% to below 53,000, which was the point of maximum pain, all of these got liquidated until the price of Bitcoin dropped to 42,000 until it was bought again, most likely due to buying orders at that point. So data from Cointelegraph Markets Pro and TradingView shows that a midday push by bulls to reclaim the $50,000 support level was handily defeated, and sellers sent the price back below 48,000. So what we see is prices going up and then people selling off to take profits, which are the bears, usually called the bears. And then when there's a red candle, the bulls come back in the market and buy that dip. With the prospect of a major run up in price to end of the year, all but Dash traders have shifted their attention to managing risk and identifying the best levels to buy dips. So as I said before, people aren't looking at this as inherently as a bull market, but they're being more careful, and they're seeing where to buy, how to buy, and at which point to buy in order to best manage their risks, because going from 69,000 to 42,000 was quite a bit of a shock, and people are just more wary of that, and now they're more afraid that that's going to happen going forward. So now it's all about managing risk. So they say that the open interest wipeout will give way to further upside. They said that the report noted a 50% decrease in open interest after this latest market downturn, as over-leveraged long positions were decimated. As we said before, when it went down to 53,000, the points of max pain, the open interest positions, especially in the long, they got obliterated, and the price went down to 42,000. There is some upside to it since all those leveraged positions went out of the market, and Ben Lilly, the co-founder of Jarvis Lab, says that Bitcoin is likely to stay in this trading range until at least the end of the month, mainly due to the fact that December 31st marks the largest open interest in terms of open contracts. So it will be trading on a band, usually between 48,000 and 53,000, which is the point of max pain. We'll see a lot of leverage positions being opened in January 1st, which is the first day of the next year. It says that overall BTC is consolidating inside the two key EMAs right now, just like in May 2021 and just like in May. Continued price stability and consolidation in between these two EMAs will precede new macro uptrend continuation. So as I said before, it's going to be between 48,000 and 52,000, 53,000. It's going to trade between these bands until it either shoots up or it either shoots down. It just depends on how the market will perform, what news there will be in the markets. Moving on, Bitcoin's biggest corporate investor has spent nearly $500 million buying Bitcoin as crypto markets lost $700 billion in value. MicroStrategy, the data analytics firm which is owned by, the Bitcoin bull, this guy has been proponent of Bitcoin and how Bitcoin can change the world for so long, Mr. Michael Saylor. He says that they disclosed that they bought a second batch of Bitcoin from the market when the markets dipped to 42,000 and it went back up to 48 to 50,000. When the dip happened, the company said that it purchased approximately 1,500 Bitcoins for almost $83 million in cash between November 29 and December 8 when that dip happened, bringing its total holdings to a whopping 122,478 Bitcoin, and that equates to $6 billion. That's a combined value of MicroStrategy's Bitcoin holdings. So if a company such as MicroStrategy is holding so much of their assets in Bitcoin, that's got to tell you something. That's got to tell you that they are bullish on Bitcoin and they believe Bitcoin is here for the long run. They own more Bitcoin than any publicly traded company. There is an investment manager called Grayscale that owns a whopping 654,885 tokens, which was worth $32 billion. So this is a private company that owns $32 billion of Bitcoin. It's incredible. Re-elected Miami Mayor Francis Suarez is going to take his retirement savings partly in Bitcoin. This mayor is in his early 40s, and I think this sets a precedence with this guy wanting his retirement savings in Bitcoin. I think a lot more people are going to follow in this step and take their retirement savings, maybe their salaries, bonuses, and cryptocurrencies. So he receives part of his salary in Bitcoin with the help of third-party payment processor Strike. And he is the first US lawmaker to accept part of his salary in Bitcoin. And it's just because he believes that it's a good asset to be invested in. He believes it can appreciate, and he believes in its open source and unmanipulatable system. It's quite a word. I mean, some people might think that Bitcoin is not manipulatable, but others would disagree because of the existence of whales and so on and so forth. So he uses Strike, which is a third-party payment processor. Looking a bit at it, Strike is just a simple payments application. It operates on the Lightning Network, which is a layer 2 Bitcoin solution. It doesn't require users to spend their Bitcoin. It uses the Bitcoin network as a formal global payment rails. What happens is that Strike payments in fiat are firstly converted into Bitcoin, transacted through the Lightning Network, and then it's reconverted into the currency of desire. And what are the advantages of using Strike and such layer 2 solutions on the Lightning Network? There is physical finality. They operate through the Lightning Network, so its cost to achieve finality is essentially zero. And it provides finality through a decentralized network, where all other payment companies do it through a central network, which is banks. It's almost, zero fees. The base fee for transaction is one satoshi or 0.04 cents. It's very, very, very low, and it's interoperable. Since Lightning Network is an open network, Strike will maintain the ability to seamlessly interact with any other applications that are built on Lightning. This gives Strike an advantage over apps like Venmo or Cash App, which can only interact with themselves. So in crypto, interoperability is a big advantage. And the fact that Strike can operate with other Lightning Network Layer 2 solutions is a big, big advantage. Finally, I just want to look at the fan token market cap, which has surged over 60% since June. There has been a lot of ICOs and listings in, for example, Binance of fan tokens of clubs. I mean, it's an interesting concept because it makes the fans feel like they're part of the club somehow. And all fan tokens across Socios and Chile's fan token ecosystems have sold for $250 million so far. This is discounting like Binance and other crypto exchanges. So the fan token market has been growing in value this year. It's another trend, just like NFTs have been growing, just like the metaverse tokens have been growing, fan tokens have been growing as well. It surged by $157 million in terms of total market cap since June. And some of the most valued fan tokens include PSG and Manchester City, which isn't really surprising because they're one of the top clubs in the world with the best players in the world. While PSG's market cap is valued at 49 million, City's is at 38 million, and this is expected to grow just because of the number of fans they have and the number of fans they're going to get in the future just because of the players they have. It's usually with these clubs that don't have like a massive history behind them. It's usually the players they have that set tone for who is a fan and who isn't. So fans usually like owning tokens because as I said before, they feel like they're part of the company. Why? Because they provide holders with access to a number of fan-related membership perks, which include voting on club decisions, maybe what color should we paint the stadium, who do you think we should buy next, things like that. Merchandise designs, so what should our t-shirts look next year, what should our shorts look next year, and things like that. They'll also have rewards, maybe for buying tickets, they get a certain number of tokens, as well as other fan engagement experiences within sports club and music fan clubs. So I think this is a good place to look at. Sports aren't going anywhere. Cryptocurrencies are just going to go up. So if sports fans and cryptocurrencies users interlink, it's more likely for these fans to get more of their club's tokens. And yeah, just an interesting space, just like NFTs, just like metaverse. I think fan tokens are really taking off, and it's going to be an interesting space to see how they're going to innovate and expand going forward. And with that, we come to the end of this video. If you liked the video, please make sure to leave a thumbs up. Please leave a comment. Please subscribe as well. And I will see you for the next video. Thank you for watching.